So I tell you a little bit about, my portfolio. I probably started about $20,000. And at some point, my portfolio at that time became about $200,000 and went back to below 20,000.
Right.
And was doing my taxes at the end of the year.
Right.
My total sales was about $60 million on that portfolio.
Right.
So you imagine the intensity of day trading.
Right.
But from that, what I learned was this is not for me. So I just absolutely stopped, from day trading to very long-term investment.
No, but how did you, I mean, that's very interesting, as in, like, how did you decide? As in, is it, because usually the thing about trading, right,
Yeah.
is that people don't stop.
Right.
Right. And this is, it's not, as a stockbroker, my incentive should be to tell everyone to keep trading, but it's not, I mean, actually, everyone should attempt to trade the market because I think it teaches a very important life skill. But I think the most important thing about trading is to know when to stop.
Right.
Like, what was your decision to stop? Was because you couldn't handle the volatility, or is it?
I think both. There's definitely a stress, every time, man, I was 22, 23 at the time, just ridiculous. I'll put entire money portfolio in one stock and wait for, it to move by $1 or $2 so we make a quick buck. But sometime, I was shorting a lot of things because in 99, I think I kind of took a position this is overheated. Even that time, I could feel it. This is ridiculous. I remember, shorting Amazon at $150. It went up to $200. And you could see, like, you can get, and I was doing all the margin. So you can see, like, easily had a, 50,000. I think the fear of, ending in that situation, also a lot of frustration because there are good days you feel high, the bad days. And somewhere, I think I was trying to also build a company at that time. I think I, made the choice that I'm going to just focus on building that. And this is not my cup of tea. I've got enough evidence of 1 year. So kind of in some ways, addiction. Right? In that case, I was able to stop, kind of cold turkey. But mostly driven by the fear of, what will happen. If like, as I'm, going down, what if I end up in a lot of debt, etc., and then having to deal with that for many years?
Yeah, I mean, I think full-time trading is a full-time profession in the sense. It's hard to be able to do something else and be also do day trading, etc. I think it's you might not do well in everything, like whatever you're attempting at the same time. Yeah. Also, I think the thing about day trading in itself, I mean, what you just referred to, right? This leverage.
Yeah.
And going against the trend.
Right.
These are really the biggest reasons people lose money in the market. Right. The last 25 years of being in this.
Yeah.
Like, if I blew up in 2001, it was essentially that.
Right.
You took leverage. Which is borrowed money and etc. And then you wanted to go against the trend.
Right.
Because people, it inherently, right, people like to go against the trend.
Right.
When trading stops, right? As in, something's going up, you think, oh, it'll not go up anymore.
Right.
If something's going down, you're like, oh, it's fallen too much, right? You want to do the opposite. And as Zerodha, we've now gotten to interact with so many traders, and I think these two are really by far the biggest reasons you lose money in the markets. And
that's very interesting. I would have thought that a lot of people are momentum traders, right? As they try to go with the trend. Can't really use contrarian here because you're looking at a very, very short-term time frame, but still, like, there are enough people who bet against that trend.
Yeah. So the thing is, there are two kinds of people, right? One are the investors. Investors, again, I think are maybe three types. Investors are people who buy a stock and who don't have an intention to sell. Right? It's like buying a house. Right? Within traders, there are people who get into it like momentum, which is saying that I want to be in it because markets are going up, right? Or I want to sell it because markets are going down. But that is a very small portion of the very active trading community. 80% of the trading volumes in the exchanges, I think 70 to 80% comes from really short-term traders, the day traders, the guys who are trading for 1 week, 10 days away.
Yeah.
They are always, their view on the market is constantly changing. Right, and there what we are seeing is that mostly people go counter trend, and it is like, just to give an example, I think one of the companies that has lost a lot of money for retail in India is the Yes Bank stock. Right, stock was at 400 rupees.
Right.
It came to 200.
Yeah,
people bought more. Right. It came to 100. People bought more. Right, people are like, now greed kicks in. Right, oh, it was at 400.
Yeah,
now it's come to 100. It can go back to 400 very easily. It came to 50 more. I mean, it got to an extent where I actually wrote a blog post saying why it's maybe not a good idea to be able to do this, to be doing this, which is, there's this whole thing called as disposition bias, right, in the market, which is, it gets you to sell things that are making you money and buy more of what is losing money, right? because you don't want to accept the loss.
Yeah.
You want to throw good money at bad money. That's a problem most humans have.
Right.
As in, our ego is at play and all of that.
Especially as if you bought at 200 and now the stock 100, you think you can at least average out your buying price. So, at 150. And what you've done in the past is affecting, as opposed to if you say, will you from your fresh, 100 rupees, will you invest in,
Right.
That's very hard to ask this question.
Yeah. And the thing is, what you need to do in the markets is exactly that, right? Which is hold on to your winners and get out of your losers.
Right.
But people generally do exactly the opposite.
Right.
They get out of the winners very quickly and try to, average down on the losers. And this is probably the third most reason, why people lose money in the market, which is leverage going against the trend and averaging down.
Right.
And I think these are lessons I've also learned after blowing up, in the sense, would I have, on my own figured out this stuff? It's very easy to say it, but when you blow up with borrowed money and you have interest payments,
right?
I mean, life teaches you a lesson, a lesson you can't forget. So I think personally, I've been a lot more conservative in terms of risk,
right?
After doing those 3-4 years of call center, because it was just it was like a life lesson I couldn't forget.
Do you think most investors, who stay in the game long enough, eventually becomes fairly conservative and long-term oriented?
If you survive long enough, that's the only way you can survive.
Yeah.
So there is no, if you're going to be taking it, it's like trading is like getting on a tightrope. The more number of times you get on it, the higher the chance of you falling.
Right.
So it's just, if you give enough time, the ones who have survived are people who think of risk very differently.